Okay, let's talk about something really fascinating that seems to be brewing in the crypto world. We've been looking through quite a bit of material lately, articles, notes, you name it, and it all points towards a pretty significant shift.
Yeah, it definitely feels like one of those moments, where the traditional finance world and the whole digital asset space are, well, finding a new way to connect, a much more powerful way.
Exactly. And the main thing we want to explore today is why all the excitement around these crypto-based exchange-traded funds, the ETFs, especially since they really kicked off back in January 2024. We're trying to understand this through what some key industry figures are saying, people who see this as like a really pivotal moment.
hmm It's really about getting how these specific financial tools are acting like a bridge, making it easier or even possible for huge amounts of traditional money to finally engage with digital assets, and in a way that feels familiar to them.
Right. So our goal here is basically to unpack the key insights from all this material, to really get a handle on what this trend means and why so many folks who are deep in this space are calling it a genuine game changer for crypto. So let's get into it. So yeah, right from the start of this year, the buzz around crypto ETFs, it's been hard to miss. And we've seen some prominent people in crypto really highlighting them as a major, major development. But why? What's the biggest impact they're having based on what we've been reading?
Well, the analysis we looked at really zeroes in on one main thing: opening the doors for institutional investors. We're talking the really big players here, like pension funds, university endowments, big asset managers.
Right, the ones with serious capital.
Exactly. And before these ETFs came along, getting involved with crypto, it was actually incredibly challenging for them.
Okay, but why? I mean, for individuals, you just go on an exchange, right? What made it so tough for institutions?
It's just a completely different ballgame for them. They were facing these huge operational hurdles. Things like needing really complex internal security, major compliance hoops to jump through just to hold digital assets directly, self-custody. It was cumbersome, often just too much.
Wow.
And relying on centralized crypto exchanges, a lot of those didn't meet their really strict regulatory standards or, frankly, their operational needs, especially at the scale they operate. So that wasn't always straightforward either.
Okay, so it wasn't just about if they wanted to get exposure to crypto, but the how was the real sticking point. How to do it safely, compliantly, within their existing, very structured ways of working.
Precisely. And that's exactly where the ETFs slot in. They basically package the crypto asset or maybe a futures contract on it inside a traditional financial product, something Wall Street totally understands is already set up to trade, to hold.
So it just fits into their existing systems.
Seamlessly, yeah. It lets these institutions get exposure through their usual brokers, within regulated structures they trust, removing that friction, that specific operational headache for these massive pools of capital. That's what's repeatedly highlighted as the real game changer here for accessibility.
That makes a lot of sense. Getting rid of those big institutional-sized operational headaches is huge. And that leads straight into the second major point that came up in the material we reviewed. This idea that crypto ETFs are actually effectively institutionalizing the entire crypto industry.
Right. If you look at the bigger picture presented, the Bitcoin ETF is kind of held up as the prime example of this happening right now. I mean, consider these numbers in the source material. The Bitcoin ETF became the fastest ETF of any kind, not just crypto, to hit $1 billion in assets under management.
Wow, fastest of any ETF.
Any ETF. And it didn't stop there. It blew past $10 billion really quickly, too, outpacing, well, basically every other ETF in history in terms of how fast it got to that milestone.
That scale and speed. It really says something about the pent-up demand from these institutions, doesn't it? Like they were just waiting for the right vehicle.
It absolutely underlines the potential capital that was sitting there waiting on the sidelines. And based on that initial rush, the analysis we saw even includes a pretty bold prediction that Bitcoin ETFs could eventually grow big enough to rival the size and importance of gold ETFs. And, gold ETFs hold hundreds of billions globally. So it shows the kind of long-term scale the industry is envisioning.
Okay, so beyond Bitcoin, which is obviously giant, the material also pointed to a specific, more recent development, something that highlights this trend continuing: the launch of the first ever XRP futures ETF on NASDAQ, trading under the ticker XRPI.
Yeah, that's seen as a really significant step, especially for XRP in terms of market maturation. It builds on earlier moves like the CME launching its XRP futures contracts. It's all about building out that regulated infrastructure for XRP products.
So this XRPI launch isn't just a one-off, it's part of a bigger picture for XRP's integration.
Exactly. The source definitely views this specific ETF launch as a, quote, transformative step towards bringing XRP more into that institutional fold, making it more accessible and palatable for those bigger players.
And it's not happening in a vacuum, right?
hmm
The analysis seemed to frame this as part of a wider pattern. I think it mentioned other related things like Teucrium's 2x long daily XRP ETF and drawing parallels back to how Bitcoin futures started way back in 2017.
hmm It's presented collectively. These developments, including the legacy of Bitcoin futures, are framed as clear signs that the market's getting more sophisticated, more integrated with traditional finance. Each step kind of builds on the last.
It builds confidence, builds infrastructure,
Right.
creates those more robust on-ramps we were talking about for the bigger investors.
Precisely.
So, okay, with these pretty significant steps happening, how did the market actually react? Specifically thinking about XRP, how did it respond when this futures ETF news came out, especially with, all the ongoing regulatory stuff in the background?
Yeah, that's a good point. The sources specifically noted XRP's resilience here. Even with that backdrop of ongoing regulatory uncertainty, the SEC delays were mentioned specifically. XRP actually saw a bit of a price recovery around that time. It went from about $2.29 up to $2.34.
No. So even with the SEC cloud, the price held up and even ticked up a bit.
Right. And that price movement, holding its ground and recovering slightly despite those external pressures, it's presented in the material as showing strong investor confidence and market resilience. It suggests investors see the potential upside from these institutional products, even while factoring in the existing regulatory hurdles.
That recovery, yeah, amidst those regulatory questions, it does seem to signal that maybe investors are looking at the bigger, longer-term picture here, seeing the potential of these institutional pathways opening up.
It definitely suggests the market is weighing those long-term positive implications, increased institutional access against the shorter-term regulatory challenges. And according to the reports, there's clearly some underlying confidence in that assessment.
And it sounds like this feeling was kind of echoed in the broader community conversations, too. The material mentioned activity on social media, places like X.
Oh yeah, there was significant buzz online about it.
Mm.
Lots of users apparently praised the insights being shared by industry figures, basically interpreting this growing institutional warmth, especially these developments around XRP futures and ETFs, as a really clear signal of a broader shift in how the whole market is being viewed and accessed.
So people were seeing it as more than just XRP, but part of a bigger trend.
Exactly. And, those online conversations, they naturally touched on other hot topics, too. Things like Bitcoin's usual volatility, some speculation around Solana maybe being poised for a breakout, the Pi token debuting on Kraken with 20x leverage, which speaks more to the retail trading side.
Right, the degen side of things is always there, too.
Always. And even mentions of big traditional players like JP Morgan apparently thinking about stablecoins, but also weighing the regulatory uncertainties in that specific area. So these discussions kind of give you a snapshot of the whole busy crypto market context while these specific ETF things are unfolding.
It definitely paints an interesting picture, a market that's maturing, attracting really serious attention, even though there are still bumps in the road, like those regulatory delays we keep mentioning. There's still a factor. So, okay, let's bring this back home. For you, listening right now, why does all this matter? Why should you care about institutional access and ETFs?
Well, understanding this fundamental shift, how these large traditional institutions can now get into crypto assets, it's pretty critical, I think, for grasping the potential long-term growth path and the broader adoption trends in the market.
So it helps you see the bigger forces at play.
Exactly. It helps you see these powerful forces working to integrate digital assets into the traditional financial system.
Yeah.
And that integration, it can influence almost everything, market liquidity, the regulatory environment down the line, and ultimately the overall size and shape of the crypto economy that, you're interested in navigating.
Right. So just to quickly recap what we've pulled from the sources, crypto ETFs are being seen as this major catalyst. They're significantly boosting institutional access, helping to weave digital assets into the fabric of traditional finance. And specific things, like the launch of that first XRP futures ETF, are viewed as really key transformative steps in this whole ongoing process.
Yeah, that sums it up well. And maybe as a final thought, something based on the material we've discussed for you to mull over. Given that these ETFs are creating this new regulated pathway for really substantial traditional capital to flow into crypto. And given the predictions that this will fuel long-term growth by attracting that institutional money and maybe even pushing towards greater regulatory clarity, well, how might this increasing integration, this merging of traditional finance and crypto, how might that fundamentally reshape the digital asset landscape that you are personally involved in or interested in? It's a pretty big question, definitely worth thinking about as these trends keep developing.